Thanks for joining this call. From Alkem Senior Management Team, we have with us Mr. Sandeep Singh, Managing Director, Mr. Rajesh Dubey, Chief Financial Officer, Mr. Nitin Agrawal, VP Finance, Mr. Amit Ghare, President International Business, Mr. Satyen Manikani, VP Business Development and Strategy, and Mr. Gagan Borana from Investor Relations. Gagan, over to you.
Thank you, Tushar. Good evening, everybody, and thank you for taking out time and joining us for Alkem Laboratories Q1 FY19 earnings call. I'm Gagan from the Alkem IR team. Earlier during the day, we have released our financial results, and the same are also posted on our website. Today in this call, we are the senior management team of Alkem to discuss the business performance and outlook going forward. Before I proceed with this call, I would like to remind everybody that the call is being recorded and the call transcript will be made available on our website as well. I would also like to add that today's discussion may include forward-looking statements and the same must be viewed in conjunction with the risks that our business faces. At the end of the call, if any of your queries remain unanswered, please feel free to get in touch with me. With this, I would like to hand over the call to Mr. Sandeep Singh to present the key highlights of the quarter and strategy going forward. Over to you, sir.
Thank you, Gagan. So good afternoon, everyone. Thank you for taking out time and attending our conference call. The fiscal year 2019 has started on a positive note. We have successfully managed to close the US FDA inspection at our Daman facility with an EIR within 4 months of inspection. Also, the company has delivered a healthy set of numbers in the quarter gone by, with the India business registering a growth of 47.7% year-on-year, adjusted for the change in distribution policy, and the US business growing by 43.1% year-on-year. Before I get into more details regarding some of the key highlights of the quarter, I would like to briefly explain the change that we have brought about in our distribution policy. In the domestic business, the company receives a significant quantum of its orders towards the latter half of the month, and in particular in the last week, which creates a lot of operating inefficiencies if these orders are executed and supplied in the same month. As the company is in the process of streamlining its distribution practices, it decided to minimize these operating inefficiencies by spreading the execution of the orders received in the last week of the month over the next 3-5 days, which leads to some of the orders getting executed in the first week of the next month. Accordingly, in the month of June, some orders got executed in the following month and hence were not accounted in the first quarter. This resulted in lower reported growth in the India business, which also pulled down the overall revenue growth and the EBITDA margin during the quarter. Adjusting for this change in the distribution policy, the growth in the India business was more than 40% year-on-year. Also, the adjusted overall revenue growth was 41.7%, and the EBITDA margin would have been 17.2%. As per IMS data, our growth during the quarter was 14.2%, which is higher than the market growth of 10.6%. Moving to our international business, I'm happy to share that our US business delivered yet another quarter of 40% plus growth. This growth has come on back of good mix of new product launches and scale up in the existing products. During the quarter, we invested close to 100 crores in R&D, which is about 40% more than what we had spent in the same quarter a year ago. We filed 4 ANDAs during the quarter and received 2 approvals, which included 1 TA. With more than 100 ANDAs already filed with the US FDA and with over half of them yet to be commercialized, I am positive about our growth prospects in the US. Apart from US, our key focus international markets like Australia and Chile also recorded healthy growth during the quarter, driven by new product introductions and market share gains. As I sum up the performance for the quarter gone by, I would like to add that we have made significant investments over the last 2 years in our infrastructure, capabilities, and people. We are now better prepared to execute and excel in this rapidly evolving pharmaceutical landscape. I expect these investments to significantly contribute to our growth going forward. Thank you for listening. With this, I would like to open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. We would request participants to use handset mode while asking your question. Anyone who would like to ask a question, please press star and 1. If your question has been answered and you wish to remove yourself from the queue, please press star and 2. The first question is from the line of Aditya Khemka from DSP BlackRock. Please go ahead.
Hi, thanks for the opportunity. Hi, Sandeep sir. Sir, on this Chinese inflation in case starting materials and API prices, intermediates, how has that impacted business in this quarter, and what do you feel would be the trend going forward?
I think the prices have gone up, Aditya, but it's not been very, very significant. I think EBITDA margins, as we discussed in the last quarter, would get impacted by 0.5%, I think, on an annualized basis. And I mean, we are not very sure when the supply situation would ease out, to be honest. But I see that some Indian companies are gearing up. They are making those KSMs. They're trying to do it. So as of now, that's the visibility we have, Aditya.
All right. And in terms of the U.S. business growth, if I look at sequentially, quarter on quarter, there has been no significant growth in the U.S. business. Is that correct? Am I reading the numbers correct?
Yeah, I think it's correct. Yeah.
So did we launch any new products in the first quarter? And if yes, then how much was the base business erosion to offset the new launch revenues?
Yeah, I'll let President Mr. Amit Ghare come in. Amit.
Sure. Thank you, Sandeep. So, Aditya, we did not have too many significant launches during this quarter, and therefore that is what has resulted not into very significant, sequential growth.
Okay. And what was the price erosion you witnessed, Amit, between fourth quarter and the first quarter? How much was the price erosion?
Single digits, lower single digits for us.
Lower single digit. And what would that same number be year over year, first quarter this year versus first quarter last year?
It was still single digits for us.
But mid to high?
Yes, around mid numbers is what I would say.
Mid numbers. And Amit, as we stand today, having received the EIR for the facilities, what is your sense of how many products would you be able to commercialize in the fiscal of 2019?
So our overall annual guidance still remains the same, higher single digits. And, last time also, if you remember, we had talked about that, saying Daman situation, we knew that's going to delay it a little bit from a quarter-on-quarter perspective. But the target for the full year continues to be higher single-digit launches.
Okay, so if I take that to be 8 to 9 launches, how many launches did we do in first quarter out of these 8 to 9?
Don't remember the specifics, Aditya, but certainly the quarter 2, quarter 3, and quarter 4 number will be higher than first quarter.
All right. And just in terms of vertical integration, how much of our U.S. revenue currently is vertically integrated, Amit?
It's less than 20%.
So with the current environment in the U.S. where prices are spiraling downwards, do you feel we may feel some market share pressure because most of our portfolio is non-integrated?
Not particularly. I wouldn't say that. The situation, as you know, one is pricing pressure coming from the U.S. and, we are towards the end of that cycle from a customer consolidation-led pricing pressure perspective. The second reason, of course, has been increase in input prices. And there, whether you had your own API or you had outside API, I don't think you were really covered there.
No, I'm talking more about the competitive pressure. So the products that you are present in, if another player comes with his own API, it will probably have more pricing flexibility versus you, right?
I wouldn't say that again, Aditya, because at the end of the day, we always see how competitive we are compared to our competition, and our competition in many cases are vertical, and there is a competition which is not vertical.
Fair enough. Lastly, on the India business side, Satyan, if you kindly could answer this. See, the last 2 years in the India business has been slightly, distorted because of demonetization and then GST coming through. What, in your view, would be the Indian pharmaceutical market growth going forward? FY19 will also be an exceptional growth year because FY18 sets a low base, but FY20 or FY19 will probably be the right
sort of a comparable number to look at. So what would your sense be of the overall market growth for FY20 over FY19?
So you're talking about market growth, right?
Yes.
So market growth, as per our conversation with a lot of people, is going to be around 10%.
And so what is driving this 10%? How much of this is price, organic volume growth, and how much of this would be new product introductions?
So normal value, so volume growth would be around 4%. Okay. New products contribute around 3%. Price would be around 2%.
Okay, that's how you arrive at that number. And for Alkem specific, how well are we doing now in our chronic endeavor? And are we profitable now in the overall chronic portfolio?
Yeah, I think, we outperform the market. That's the least we can say for chronic. I think we have started seeing green shoots. And we, at the last meeting itself, we said that on EBITDA margins for chronic, we are breaking even. So yes, we are slightly profitable, but we still have a long way to go to catch up to the productivity and the profitability of acute business. But just to answer you specifically, the chronic business is not a money-losing proposition as of now.
Last question from my side, Sandeep. Is your gross margin on the chronic side better than your gross margins on the acute side?
Yes, certainly.
Okay, thanks. I'll get back in the queue.
Thank you, sir.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, one question for you specifically in terms of your role, how in the last 6 to 12 months your role has changed in terms of, heading also the India business, and what are the key steps you have taken in terms of growing, improving hygiene is what we saw this quarter, but what are the other steps we have taken or the spots we are working on?
No, so nothing greatly has changed from the last, conference call also. We spoke about cost control, productivity. So those kind of things we are working on, focus on chronic. So the same usual stuff which was strategic for the company continues to be the same thing which I'm focusing on.
Okay, but any leverage we can have from our strong acute portfolio and the doctor connect with GPs on the chronic side as well? Would that be not a good idea, or we are working already on the same?
That's a good point, and we are already kind of trying to do something on that front. And we have done few things in the last quarter on that front where we have taken some products which are chronic to the acute side as well.
Okay, thanks for that. And in terms of gross margins, if we see when we did similar kind of, absolute run rate when adjusting for the change in policy, we saw 3Q around 64% gross margins. US sales also was not very different. I mean, little different, but yes. So just trying to understand, gross margin 64% versus 60% in the current quarter.
It's a product mix situation, Aditya. So our ethical business is doing well, and last time, if you're comparing to last year, the generic component is also kind of the control. So overall, your margins are looking slightly better. The Indian generic business.
So how should we look at for the next 9 months, especially on the gross margin side, sir?
I would hesitate to give you a guidance, Prakash, but I think you can draw your conclusions.
Why I'm asking this is because in the last call we did mention about, EBITDA margins around, 16-17%, and that time our Daman facility was not clear. So now with that moving out, no remediation cost and stuff, so we probably could see better EBITDA margins. Would that be a fair way to think?
Yes, better compared to last year.
Okay. Any range you would like to highlight?
When you say better, you mean from the current quarter?
No, from last year, yes. And from current quarter, some perspective, how should we look at margins?
I think what we said after adjusting what EBITDA margins we have, 17.2 that is, we should be trying to maintain that for the year.
Okay, great. That's helpful. And last question, we recently got on good approval, generic Empira, Dalfa-Pradane. So what's the outlook there? Could that be monetizable in the near term?
It could be, but it's slightly complicated, and I'll let Mr. Amit Ghare give you some colors on that.
Thank you.
So it's in the Federal Circuit Court from a decision perspective, and until the Federal Circuit decision comes, we do not see any generics really launching. So that's the situation. The Federal Circuit decision, people are expecting will come sometime in first half of 2019.
Calendar 19, okay.
Yes.
Okay, perfect. I have more question. I'll join back. Thank you.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. First, on the U.S. business, could you give us some color? I know we don't talk about exact numbers, but in terms of profitability of the U.S. business, till about last year, I think it was just about break-even. This year, obviously, we haven't seen as much ramp-up, but, any color there would be helpful. Have we seen gross margins improve there, and therefore, how do we look at the EBITDA trajectory?
So, Neha, you yourself said that we don't really give information neither on the gross margin nor on the EBITDA margin for the U.S. business. I don't think we ever said that we are at break. I don't know exactly what words you used, but we have said in the past that we have passed the break-even point, and I think that's what we have maintained. We talked about pricing pressure and also input cost increases, particularly in the current quarter compared to same quarter last year, and certainly that has impacted our margin as was expected in a way.
So the profitability overall hasn't improved so far because of these issues?
Compared to last quarter, same year, certainly not.
Okay. Now that, the Daman is behind us and we'll probably see improvement in, approvals, is it fair to say that, as the own launches improve, you could see improvement on the U.S. margins, or do you think there is more of the input cost pressure that could come in and offset that margin?
No, historically the new launches always are at better margin compared to the existing portfolio. So if the new launches come through, more new launches come through, as we said earlier, certainly that should reflect into our margin side as well.
Okay. So just to refresh my memory, what are the number of launches that you are looking at for this year?
8 to 9 launches for the full year.
Okay. And on the India business, what is the, reason for the change in the distribution policy? It seems pretty sudden, and would it improve, the margin that we see in the existing business in some way, or this is just, better efficiencies essentially of the existing infrastructure?
Yeah, I think, Neha, this is more for the latter part. It gives much better efficiencies and ease of operation. The cost savings over here might not be much, but this will lead to much better utilization of resources. Otherwise, your distribution centers and depots primarily operate for, just a week, and rather than, for the whole month which they are set up for. But, it all makes it very even, over a long period of time, and within the year it should not matter. So it's just a shift from one quarter to the other quarter.
Fair enough. And my last question is on R&D. How should we look at R&D going forward in terms of, absolute number or percentage of sales, and if you could just throw some color on the focus areas?
Yeah, same as what we said before, between 5 to 6%. I think that's a guidance which I think will stick for the year as well.
And the number of filings would be?
Around 12, we have said. We want to file every year, at least.
Okay, and any specific areas that you're looking at?
No, so our portfolio has not changed. We are still focusing on oral solids. By and large, most of them would be under oral solids.
Mm-hmm. And you haven't seen any change in our R&D pipeline, as particularly in the U.S. environment, seeing more pressure on the oral solid side. We haven't changed our strategy in terms of what products we are looking at?
No, what products we certainly would be looking at, but dosage form change, we have not kind of done where we are saying that we are now going to focus on oral solids. Yes, but within oral solids, we have picked up more complex products. And the proof will come in the next couple of years, then you'll see some approvals. But oral solids is still a primary driver of India filings.
Okay, thank you so much.
Thank you.
Thank you. The next question is from the line of Abhishek Sharma from India Infoline. Please go ahead.
Thanks for taking my questions. Just a couple of them. How many, in the India market, how many products did we launch in FY18?
We launched about 38 products.
Which is a significant decline as compared to the 50s and 60s that we were doing in years earlier, right?
Yes.
Any specific, is that one time because of the market conditions or?
Not really. I think a year before that, we had launched few divisions. There were some divisions that we launched. That is the reason why the number of new products that you had in the previous year was higher.
And we'll trend at around, this 30-40 number now. Is that the understanding?
Our product launches in the current year would be in the range of 30 to 40 products.
And all these would be in chronic, right?
Not necessarily in chronic. We have a very strong sales on the acute front, so we will have equal number of products for the acute as well.
Got it. Perfect. And in terms of total field force, what's the number now with the addition of these 2,000 reps?
So we have 8,000 people right now in the field.
And this includes managers as well?
No.
This is just the reps?
Yes.
Got it. And so is this net addition of, let's say, about a third of your sales force in last 2 years, is that the reason why the manpower employee cost has moved up sharply in the last 2-3 years?
Absolutely.
And this is likely to sustain, right?
Right.
And in terms of, a related question would be around the fact that, you said that the distribution policy led to a dip in EBITDA margin. The impact of that would be entirely on the gross level then?
Yes.
But part of that would get countered by this increase in employee cost, right?
Increase in which cost you said?
Employee.
The employee cost, we have already, these employees, they are already on our roll. So, because of our distribution policy, when it got shifted from this quarter to next quarter, and hopefully going forward, it may get even out also, because our intention is to have not concentrated sales order during last week of the month. So we believe we'll be following better practices going forward, and it will get evened out. So, but employee cost, we don't see immediate any big addition to employee cost. We already have field force in place.
Got it. Just the last one, which is more longer term. In 3 years, what kind of acute to chronic mix do you see in your portfolio?
As a, chronic business, we will kind of double every 3 to 4 years. So that's the internal target.
And acute would grow at market rate?
No, acute, we outperform the market as well, very clearly.
Right. So the mix would change, it
would not change dramatically, honestly, because acute, we are very big, but it will start getting better, but it will not make a difference like huge. We will still, in 3 years' time, will be still a acute, heavy company.
Right. All right. Thank you.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Damayanti Kirai from HSBC. Please go ahead.
Hi, thanks for the opportunity. Sandeep, sir, can you mention about the progress in OTC portfolio for India market, how we are doing there, and what will be the outlook for next 2-3 years?
Yeah, thanks for the question. See, OTC, as we mentioned last time, we are kind of evaluating. We are in the next few months, we'll decide how much more capital and focus management bandwidth we need to put on that. As of now, we are not very, very keen on it, but we will evaluate it as we move forward.
Okay, and sometimes back we talked about some focus on growth areas like biosimilars and oncology for India market also. So in last few years, has there been any changes in focus areas in specialty segment, or there has been like same?
No, so we are developing some products for the India market to start off with an ROW in the biosimilar space, but that is a long drawn-out process, and for us to see those fruits will take us some time.
Okay, and in India, like our specialty focus areas remain the one which we have been focusing earlier, like cardiac, diabetes, derma, and all, right? There have been no changes there?
No change, not at all.
Okay. Okay, just going to US. In US also, like when we can start seeing ANDA filings in niche segment, like right now we are mostly in oral, but we have targets in some niche areas also, right? So when we can start seeing filings and approvals there?
Yeah, so, we are evaluating the space because, as you know, the US landscape is changing. We have to be sure where we allocate capital because keep in mind that it's not just R&D, it's the manufacturing also. So you'd have to do both of them together. So in the next year or so, we might think of changing our strategy if it's required. But I don't think so. We should be pushed in a situation where we will pick up any dosage area which is very different from oral solids.
Okay. That's all from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Shrikant Akolkar from IIFL Securities. Please go ahead.
Hi, thanks for the opportunity. Just want to know the acute and chronic revenue split this quarter.
It would be about 85-15 broadly.
Okay. And can you also provide acute and chronic MR split during this quarter?
Again, 75-25. 75 for the acute, 25 for the chronic.
Okay. And is it possible for you to provide mycophenolate contribution in Q1?
We don't give very product-specific answers, but we said, in earlier calls, so none of our products, in US contribute more than 20% to our US revenues. So full sales for mycophenolate as well.
Okay. And are you seeing any sign of competition picking up in this particular product?
No generic has so far been approved. So we will wait. We will only come to know when someone gets approved.
Okay. Thank you so much.
Thank you. Before we take the next question, we would like to remind our participants you may press star and 1 to ask a question. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Thanks for the opportunity again. So in the past, we have seen approvals different dosage forms also like, Xeloda and so complex Nexium as well. So what is the status of launch there?
Prakash, so obviously we have filed other than oral solids. I think what Sandeep was trying to say was to tell you that majority of our portfolio will be oral solids, but we have filed powders, we have filed liquids, we have semi-solids and topicals and all of that. I think that was number one answer. And the other question specifically in terms of launching some of the products that are approved, obviously we continue to gear up our supply chain and look at the correct time for launching a product because both the products that you mentioned are already genericized. And we are therefore evaluating from a overall cost perspective also and the market perspective also. And at the right time, we will launch these products.
Okay. And one more on the US side. So, last year we had a very good growth, A, because of launches, B, because of market share. So we have in the past said that, we gave that $200+ million, we more than achieved it. Just trying to understand over 3-year period, how do we look at the growth from a 3-year period? Do we see a similar growth going forward as well?
Prakash, if you recall, we have always said that there's a large piece of our portfolio which is yet to be approved and yet to be commercialized. And our endeavor is to see how we can continue to maintain per ANDA, average that we are hitting. We are slightly on the higher side. But even if we normalize it a little bit and we maintain that average for our new launches and for the whole portfolio, that is, I think we will get the numbers that we have broadly talked about.
Okay. And lastly, on the, CAPEX side, so I understand this year CAPEX is relatively lower. So what's the number and where are we focusing in terms of spending the same?
Prakash, if you are talking cash outflow on account of CAPEX, so our estimate is will be landing somewhere 550 kind of, 550, 575 crores. Because there are some carry forward capital expenditure of previous year, which needs to be cashed out. I think otherwise this year's CAPEX is normal CAPEX.
And last year was how much?
Last year, it was 670.
Okay.
670.
Okay, and where all we are spending? I mean, I think US and Sikkim was largely done, right?
Yeah, so we have now Indore in our pipeline, and Sikkim, cephalosporin, some expansion is going on, and so that will most of these things will get completed in this year.
And just to carry forward in fiscal 20, would that number go down?
On what? On CAPEX?
Yes, sir.
CAPEX normally we feel will be in the range of 400 or 350 to 400.
Okay, so the free cash flow generation going forward will be much higher.
We expect that.
Okay, and lastly, is there any update on that real estate non-current investment that we have in terms of divestment?
Nothing significant change, what we discussed last time. But we are hopeful this year we'll try to come out of real estate fund.
Okay, sir. Thank you so much and all the best.
Thank you. Anyone who would like to ask a question, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you everyone for attending this call. If any of your queries still are unanswered, please feel free to get in touch with me. Thank you.